Hi, welcome back to another video. I'm Raghav. So this video is a call between one of the members of RCG and me, and I explained the Fractals Basics to them. So anybody new to the Fractals watching this video, this can be very helpful to them, and anybody who wants to revise their concepts and they do not understand something about the options analyzer and the fractal charts basics, they can watch this video. And so, yeah, just enjoy the video and have a good day.
Okay.
Okay, so I was explaining why the wave. There's a simple concept about the wave is that the higher the wave number you use, the lower the number of transitions you will see on your chart.
Okay.
Like right here, the market moved from above the pivot to below the pivot. So like that's a transition. Okay, market moved from below the pivot to above the pivot. Like that is what transition. Okay, so like we are using wave 10 here. So we see that we have very limited amount of transitions, right? I'm audible, right?
Yeah.
Okay. So you can see that we have very limited amount of transitions. The limited amount of base, right? Now I'm gonna move it to like by 50 and just notice the transitions, right? The past 10 days we are in the wave 10, we saw like 20, let's just say a rough number, 20 transitions. With the wave 50, we are seeing 1 to 2 transitions, right? You can see the difference. So like it is the same rule for the lower number of waves. For example, the lower the wave number you use, the lesser the bucket for both of the conditions. The higher the number of wave number you use, the lower the number of transitions you will see on your chart. The lower the number of wave number you use, the higher the number of transitions you will see of your chart.
Okay. Let me see if I get. Let me see if I get this. Let me see if I get. So the lower the number of waves, you will see more movement below or above pivot. The higher the number of the waves, you would see less moves below or above pivot.
Correct. You got it.
Okay.
Perfect. Yes.
Okay.
That's perfectly. Yeah. Like right there, if you're using wave one, right? 50, wave one, 15 minute, right? You can see the number of transitions, like, right? They're like, what? We have 40 to 50 transitions
More or less.
in the past 10 days on wave on 15 minute, right?
Yeah.
So like, it makes sense. The definition I just gave you that.
So we move to wave 10, we should say
That's all about.
less movement.
Yeah, you can see right here. Make sense?
Let it pop up. Let it refresh. Okay, yeah, I see. That's probably
Okay.
8 or 12, 8 to 12 cycles, something like that, right?
More than that, actually. I think so. Okay, let's just count. 1, 2, 3, 4, 5. Yeah, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, you were right. So like 8 to 12, like 13 transitions again in the past 10 days. With waves at 15 minutes, with wave 50, there are 2.
Okay.
Make sense?
Yes.
Yeah. Now I'm gonna talk about.
So the idea of the waves are if you want to
Yeah, go bird.
if you want to do like if you want to work a swing, you would have more waves. If you want to do like scalps, you will do less waves.
Yeah, right.
Okay.
Yeah. So like, the point of less waves is that you see more transitions, right? You can do like quick binary trading. Okay, like if you can just see these cycles. Okay, we're gonna talk about the cycle. Let's just not talk about them right now. Then we come to that. But like the lower wave number can be used for scalps. Absolutely correct for scalps, even using them with higher waves. Okay, I'm gonna show that to you when I'm done with the summarization of our option right here. So like that, it makes sense with its name that it loads the number of data, number of days of data you want to see. For example, right now we were seeing that. Okay, so like I want to see more data, I want to see more resistance, and I want to see more support. I'll go for the D, right?
Okay.
So the number of days of data had decreased. Makes sense? That is all you need to know about the days to load, right? And the aggregation. The aggregation is basically time. Okay, daily 60-minute, 30-minute, 15-minute, 5-minute, 1 minute time. So that is the aggregation.
Okay. And there are 1 minute, 5 minute, 15 minute, 30 minutes, 60 minutes a day.
Yeah. Yeah. Okay. So now I'm gonna tell you about the support and resistances we have at the fractals. Right. You understand the concept about the pivot, right? The pivot is the neutral line of the fractal chart, whatever you're using. If you're above the pivot line, like you're in the zone, so it means that you are bullish, right? In terms of bias. Okay. And they just say that you're below the pivot, it means that you are bearish, right? So currently the market is above the pivot, right? You can see that the price is 481.3, but the price is 482.44. So like this is held as a bullish bias according to the fractal chart. Okay. Now I'm gonna tell you about the support and resistances on this chart, right? But there are black lights. You see these black lights right here.
Yes.
So these are like all the resistances. Okay, all the black lights that are above the pivot are resistance. Basically, we call them imprints. Okay, make sense?
So the black lines are support and the red lines are resistance. And you call them what?
No, no. What? No, I did not tell you anything about the black and red lights. I said only the black imprints you see on this side of the chart.
Oh, okay. The black imprint. Okay, yeah. Sure.
I'm gonna use like
Highlight.
mouse highlight.
Yes. Yes, please. I was lost. I like that car,
Really? Can you see it now?
Awesome. Yes.
So like all the imprints you see right here, all these are resistance, okay? Because we are above the pivot. And if you're down bullish and you're looking like for reversal for trades, you usually take reversal trades, right?
Yes.
So you must be looking for resistances. So it gives you all the resistances. Now I must be wondering, okay, we see the resistances, but how are they actually fall, correct? So, okay, I'm going to give you the idea with this example right here. You see that the market reversed from 493.69, correct?
Yeah.
You see it? So it means that this turned into an imprint when we saw a transition. You understand the transition, right? A transition means that when the market gets below the pivot in this condition, okay?
Okay.
So like, I'm going to show you where that imprint was formed. Okay, you see the market is above the pivot, right? So now Now you want to see that when that imprint was formed. When we saw transition below the gap, you see the transition, we have the transition right here. So that led to the formation of this resistance. You know, like, sometimes in the market, people, use previous highs, or they say liquidities, and use them as support or resistances, right? So this is kind of similar to that, but of course, this is more refined data. This is not something random. This, right? This is not like everyone is seeing, you know. So of course, this is what we are using, this actual data, and what people look at using those normal charts of trading view or anything else are just linear charts, and they are like, not making much sense to a lot of people. So this makes sense. These resistance you see, all of these were, the system is like doing some complex calculations to actually just figure them out for you and just show you in the most easiest way possible so as to take financial decisions in the market. Okay. So I think so the resistances are pretty much clear. And in some areas you must be seeing that these resistances are real much more dense. Right? So that means that it forms a cluster. So how is a cluster formed? Basically, when like the market takes reversal from one area continuously, leads to a formation of a cluster. Okay, like right here, the market reversed from this point right here, then this point right here. Okay, and then this point right here too. So that led to the formation of a cluster because market reversed from that point like 3 times, and 3 imprints just were very close to each other, so that led to the formation of a cluster. Okay, so this was the thing about the cluster. Now we're going to tell you about the last line of defenses. Basically, last line of defense is like the last imprint after that we see a breakout, like the LLOT, or the last line of defense, is like a breakout level. Here, we can see that the breakout level is 493.69. So it means that if you see a break above 493.69, we should see more continuation. Okay, so 493.69 can be used as a target if you're seeing like the market is pretty much very like in a trend day, and you can use it as a breakout level, right? You see that the market is broken above the last line of defense, then you can take more longs, right? You can take calls and just benefit from it. Make sense?
So what you're saying to me is, once it's in that point and you see a breakout from that point, you'll be most likely to have a bullish momentum, and you can take calls in that point.
Yeah, momentum is not I can judge or anyone can judge, right? It all depends on the market, but it means that we have a breakout and we do not have any further resistance, right? Because we do not see any imprint in this area, so it is a breakout. Make sense?
Okay, yeah.
Like same thing right here. After this, you see a break at 493.69. So this whole clear area is like, the market can just slide through it if it sees no turbulence, right? But here in all this area from the pivot to the force 87.62 is full of turbulence, right? Yeah. It's full of resistance. So this is not like a clear area of no resistance. This is a clear area of no resistance. This is a clear area of no resistance. Make sense?
Yeah, I understand.
Okay, great. So you see these red lights and these black lights?
Yes, I do.
So these lights, okay, not the imprints right here. Okay, these lights. But these red lights that are above the pivot are actually like open states or targets. Like you see the open state right here, you see the open state right here. So these open states you see can be used as targets, okay? Like if I just use a slider, targets.
Oh, okay.
These can be used as target. Yeah, I'm gonna explain. So, okay, so here I'm gonna just go back in time. So let me just replay chart to just show you how it works. You see that we have two open states right here. You know, like 478, 180, and 479.0. You see, you know, it's working open right here. You see, makes sense? You see it?
Yeah.
Right? So let's just say that your bias was bullish and you were looking for bearish trade, right? And you are in a bullish trade, let's just say. And you're looking for a target, right? So the best thing to do is to look for open states to choose as target. You can use any type. You can use the 5 minute, 10 minute, the 5 minute, 15 minute, 1 minute, or like even the daily time frame. If you see that the market is near an open state as a target, like right here, you're in a bullish trade, you will look for target. Okay, then the target should be like, you know, this, sick. Yeah. So we just got above these open states right here for 80.0 and 480.23 because we saw the transition, so the numbers change, right? Because the pivot value changes after every transition. I'm going to come to that, but you can see that if you could have taken like a bullish trade right here, this should have been your target, right? It makes sense.
It does.
So same is for below the, okay, like let's just say that, you know, like right here, we saw the transition and you were looking for a target, right? You could have used this open state when it was open because it wasn't closed by another candle, right? So this could have been used as a target. Right now, we have this open state right here, 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 and this open state right here. And let's just say that you just have a bearish bias one day and you're looking for bearish targets, right? You had them here, right? You took the trade right here and you could have used this as a target. Now we are doing just hindsight, so it doesn't really help you in any way by using this hindsight, but I'm just giving an example, okay?
Okay.
Just to explain. Yeah. You can see like these open states are very close. So, you know, like let's just say I was in a bearish trade right here, so I could have used these target. Then the next thing I must have explained to you is like probable bands. So I'm gonna give you the like how do these probable bands work. I'm just gonna explain to you. So you see the 80%, 50%, the 20%, and the 5% band, right? Basically, what they mean is that the market has 80% chance to reach 483.67. Make sense? The market had 50% chance to reach 486.91. Then the market has 20% chance to reach 493.70. Now this also works as like reversal probabilities. Let's just say the market is at the 20% back. Okay, it's near 493.70. So the market has 80% chance of reversal from this open state right here. Make sense?
Totally.
Okay, perfect. That's great. So that is all you need to know about the probable bands. This it is a very, very simple concept. These can also be used as targets along with the opens. Okay, make sense?
Yes.
Are we good?
Awesome. Absolutely good.
So if you have any doubt, till now,
No, this concept, I I got it.
Okay, so you understood this perfect.
Yes.
So that great, great, good job, good job. So now I'm going to tell you about the macro trend and the standard deviation. Okay.
Okay.
So this is simple concept about the standard deviation is that you see the standard deviation squeeze. Look at my cursor.
Yes. Those little dots.
So what that means that whenever, sorry, but
those little dots are the standard deviation
dots. I don't get to.
dots. The green and the red line.
Yeah, these dots. Yeah, these dots. These dots.
Yeah.
Yeah, perfect. It's correct. But I wasn't talking about that. Okay, you understood it perfect. Great job. Okay. First, we need to know like what the standard deviation does. Okay. Basically, it tells you that when we can see volatility in the market, then we can see consolidation, and also when we can see reversal. Okay. So it makes all of that easier for you. Now I'm going to tell you how it does that and how you can actually use. You see the standard deviation squeeze, right?
Yeah.
You see it. So whenever the standard deviation does, just give me a minute. Just give me a second.
Sure.
Okay. Sorry about that.
It's okay. No problem.
Okay. So
Standard deviation.
So it's like whenever you see the market of these stocks in the standard deviation, sorry, I never get that.
No, you were explaining me that standard deviation squeeze.
Yeah. So whenever you see these dots of the standard deviation in the standard deviation space, the Fractals is trying to tell you that, okay, brace yourself, you're going to see an explosive move. Now, it does not tell you the direction, but it gives you the hints. Okay, now I'm going to tell you how it gives the hints. You see the macro trend?
Yeah.
So basically, it tells you that the whole bias, or you could say how the market is tuned according to the standard deviation. Okay, so you see that the market was in the squeeze right here, right? In the squeeze right here, and we had the macro, but we still saw a red bearish move, right? This was an explosive move, you could say, right? With the hints, but it didn't never give you the 100% prediction that okay, the market is gonna go in that direction, right? Make sense?
Yeah.
Hello.
Yeah.
Okay. Now let's just see right here. The market was in the squeeze, so it was telling us, okay, that we can see like a explosive move. And look at it. We had the red macro right here, right? And we saw the explosive move. Then the market reversed, okay, because it was in an outlier zone. The market reversed. Then the macro trend changed to green again. And then because of the macro trend, we saw such a great move to the upside for almost 3 days. Okay, so it must have made sense to you that how important this macro trend is because it gives you the bias of the whole chart. Well, they get to, the probable direction of scalping, right? Makes sense?
So,
Hello.
yes, I'm getting the macro trend,
So
and I'm getting the standard deviation squeeze.
okay. So the standard deviation squeeze is pretty simple. Whenever you see that these whatever ticker you're using and the dots, the standard deviation dots are in the squeeze, it means that okay, we can expect an explosive move here to either of the direction. And it does not tell. Standard deviation only tells you that okay, we're gonna see an explosive move, but I don't know what direction it's gonna be. Make sense? You can use, these fractal supports or resistances to actually figure out, okay, the market can reverse from here. So we can see like a bullish squeeze, okay? So, we can predict that with experience. Anyone can do that, but it takes time, okay? Then the next thing we're going to talk, these starts have two meaning when they start to consolidate or, just flatten out. Either we're going to see a reversal or we're going to see the market like reverse. Okay? Makes sense?
But that tells me,
Now, like right here, we can go for it.
Okay. That means consolidation.
Yeah. Now, here you saw that the standard deviation was flat. So this means that, okay, we saw consolidation here. Same was right here. Standard deviation flat. We saw consolidation. 8.
Yeah. Consolidation and choppy.
Right here. So let's see. Yeah, exactly. We saw some choppiness right here and right here. Okay, whenever the standard deviation was flat. Okay, but right here, when we saw that the standard deviation was flat, we saw a reversal, right? Makes sense? And the same thing right here too. Standard deviation reversed and it was flat for like 2 dots and we saw a reversal. Make sense?
Yeah. So when it's flat, it could be.
I mean, you get to see the chart yourself.
Yeah.
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 Go for it.
When it's flat, it could mean a consolidation or a reversal. When it's down, it could mean a squeeze, a gigantic move.
Yeah. Gigantic or let's say a volatile. Yeah. Makes sense. Nice. He got it. Yeah. And like the expenditure of the standard deviation basically tells you like, till what extent the move is gonna be. Like right here, we saw a reversal from 0.5 standard deviation, right? 0.5 number right here.
Mm-hmm.
And the market moved from this squeeze right here, this squeeze, till right here.
Your mouse is black. Your mouse is black.
Right, this was 0.5.
Your mouse is black.
Okay, so this was the expenditure we saw for this move. Okay, it can be different.
Yeah, okay.
Yeah, you can hear me, right?
Yes.
I think so. There's some problem with my mouse. Okay, can you see my screen and my audible?
Yeah, and I can see your mouse as well.
Okay, so you can. Okay, so now you can just make out that we saw the peak right here, then we saw the reversal, and we saw the extended move till the 0.5 standard deviation, right? And it depends from move to move actually, like till what extent you're going to see the move. So it all depends on that, right? So, from this squeeze to this 2.6 mark right here, we saw many moves, right? We saw many transition. So even if in the, like, you could say that when the standard deviation is like kind of like flattening, right? You can see a squeeze. Okay. Whenever you see that the market move is, really strong, it means that, okay, you're going to see a middle squeeze. Okay. Whenever the standard deviation dots are like in the 0.5, 0.9, 1.8 zone, and they're like kind of flat, but in the market, the moves are increasing, the volatility is increasing. It means that, okay, you can see an explosive move with the standard deviation too. And in the future, it can actually help you with the reversal. Like right here, it was flattening, right? And we saw kind of like a consolidation right here, right? So with multiple moves too, the standard deviation can be pretty much helpful, right? It now depends on the person's practice. So it does not matter how much I explain, everyone just needs to go through some charts, these like for a week to actually, till it clicks to their own mind that how this stuff actually works. Make sense?
Yes. Yes.
Okay. So yeah, I explained to you the open states. I explained to you the waves and the aggregation-based load, standard deviation, the probable paths. Yeah, one more thing. We did not talk about the L values and the H values. Do you remember the
I remember
points of the
what. Yes, I
Oh,
remember. But you can you can
explain it to me. Explain it.
yeah, awesome. Yeah, sure. Um uh when we see the L values or the H values, L stands for low and H stands for high. And when we see like
Right.
when we see like at the far right side of the I'm sorry, the far left of the screen, we say H 4. That means price wait
Right.
to that place 4 times. And the other one that's H2, it means
No. No, wrong.
okay.
Okay. So I'm going to explain the H values concept again. So these H values actually tell you the number of heights. Okay.
Oh, the number of candles that are above period.
Exact. Exact. No, right here. You got content. Okay. Let's do a little activity.
Sure.
Here you can see right here we form first candle, second candle high, and the third candle high. We saw the H3. Make sense?
Yeah.
Then we saw like first candle high, then second candle high, but after that we did not see any high, right? We did not see any candle like closing above or even showing the wink action above this candle's high, right? So it was stuck at H2. All these highs or all the, no, not the highs, all these candles did not actually matter. Sense?
Yes. Yeah, because they didn't broke the high.
Okay, exactly. Yeah, that is all about the H and L value. Same as like for the uh, lows, like for example, here from two lows, first low and second low, but after that we did not see any other low. Make sense?
Uh-huh.
So we got So that we did not see any higher LVAP. It was
You're breaking up, Fractals.
make sense.
You're breaking up.
Hello,
Yeah,
can you hear me now?
yeah,
Make sense?
yeah.
Okay. So I think so. We are done with the basics part, and now you can watch this video again, and also when we upload this video, uh, for everyone in the Russell Capital Group YouTube channel, you can also see it right there. Okay. Now I'm going to explain you about the options analyzer. It's pretty useful tool, and I actually love to use it. It was the like my go-to every single day when I was, trying to find out the files. Okay. This when you right click and you see the second option, that is your options analyzer. Okay. Basically what it actually does is that it actually tells you the probability. You can hear me, right?
Yeah, yeah,
So it actually tells you the probability of forming highs and lows. Okay. Like I'm gonna maximize this. Like right here. Now it tells you the thing that there is 100% probability, a 100% probability of forming H2. You know, when you see transition above the pivot, then you see H1. So the chart of the past 10 days, week 15 minutes telling you that there is 100% probability of forming H2. Make sense?
yeah.
And it just say we formed H2. Okay. Now you must remember, okay, so what's the probability of forming H3? Okay. It's written right here. 80%. Makes sense? What's the probability of forming H4? 70%. What's the probability of forming H5? It is less than 70%, more than 50%. It's still more than 50%. So it's good. But then, what's the probability of forming H6? It's 50-50. And then after that, it's less than 50%, but more than 40%. Okay. So, why it just jumped to the H13 after that at 6? It's because probably we did not see any H7 on this chart. That is why it is not showing us any probabilities about the H7 or H8 or H9 or H10 or H11 or H12. Okay, we saw H4, H2, H13, H60, H60 right here, 10% probability only right here. Okay, you can see the odds are pretty bullish, correct?
Uh-huh.
And now for below the pivot or the lows, okay, let me just maximize that. Okay, you can see this, right?
Yeah, sure.
You good? Okay, so it tells you that there is 100% probability of forming L2. Same thing we had for the H2, right? 100% probability of that. But for H3, there is 67% probability. Whereas when we were looking at our H3, we had 80% probability, right? The market is tuned somewhat bullish, correct?
Um,
Makes sense?
yeah,
And for H4, it was 70%, but here it's 44. It's less than even 50%. So, you must be seeing that for the last 2 weeks, we have been seeing like more like bullish moves, right? So you can see that the odds are also favored towards the bullish side. But as the bias changes, we see more bearish direction moves, these odds can change. Okay, now here, let's just say that I'm not satisfied with, this amount of data. I want to use more data. I want to see more chances and more odds, right? So you can, I just increase the days load from 10 to 20. Okay. So like right here. Okay. See. Okay. So right here, you can see the odds. Now they are pretty much different. Why? Because in the past 10 days, we have been very, very bullish. Yes, we saw that those odds were very bullish, but now we have been using 20 days, so it's like almost like a month, right? We have 20 to 20 days in a month, so it's like almost like a month, correct? So now this is like the data for a month for maybe 10, 15 minutes, 20 days to load. Right now we are at H4, right? Now for H5, what is the probability? You are looking for a trade. You're wondering, okay, should I take call side or should I go for bearish side? What should be my direction? Correct? So for H5, there is less than 46% chance. So are those playable are those odds playable? Tell me, Nicker.
The probability
of slow.
Yeah, the probability.
Yeah, the probability are those, good odds for H5, less than 46%, but more than 33%. Are those good odds to actually go for a call side trade? You tell.
No, it doesn't favor probability.
Exactly. Makes sense. You are getting it. And let's just say the market is at H11 and you're wondering, okay, so are we going to see H12 or not? Well, there is less than 21% chance of seeing that. So it means that we have 80, sorry.
Yeah, less than 79%.
So we have 70, like 79% chance of seeing a reversal from H11, H11 right here. And here you can see that how many times you're gonna actually see the H3, like, H3 formed on this chart 5 times, H4 formed on this chart 3 times, H6 formed on this chart 3 times. Okay, you can just count them right here. Even if when you are watching this video again, you can just count them. They're gonna come out to be 3. And H60 is gonna come out to be 1. Okay, make sense?
Yeah.
Same is for below. Now I'm gonna tell you about this chart. Okay, and what it actually does. Basically, it just it just configurates all the highs and the lows into like whatever order you see them on this fractal charts right here. So it just configurates them into the bar form. Okay, like right here you see L2, then you see H4, then you see L4, then you see H1, then you see L3, and same thing right here, L2, H4, L4, H1, and L2, right? Makes sense? But 9 must be 1. Okay, so Rabel, how am I supposed to benefit? Okay, so if you are looking forward to benefit from it, you just need to click on sort histogram, and it just sorts out the, all this data for you. And then what are you supposed to do? Let's just say that you see that the market actually, after a transition, straight away moved up, like in the 1.8% up. You see on the right side of the chart, you see the 1.8% where it's surging 42.41.
Yeah.
So, and you're wondering, okay, so he opened like way above the pivot, right? Like it's like above the 50% band. And now these odds might not be the best thing to look at. Correct? Because these odds are just telling you the probability of highs. But here in this example, you just opened up way above the pivot. Now you're looking for something more reliable. Okay, then you can just go for this sort histogram thing right here and look for 1.8%. Okay. So yeah, 1.8% mark you can see on the left side of the chart. So how many highs did we see above the 1.8%?
So
yeah, so out of like 44 charts, we saw our 24 highs, we saw only two above like 5.8%. So that's like 8.3% of 24. Yeah, 8%, something like that. So there's like 92% probability of fruit.
Reversal.
Yeah, 8.3 subs. Yeah, so there's like 92% chance of reversal from that price point. Because we open way above the pivot. Make sense?
I got it.
Yeah. So that is like the important part you need to know about this sort histogram and the options analyzer. Then we had the MM like tool.
Yeah.
Editor, the MM tool or not?
No, I don't know. This is new to me.
Okay.
All this is new to me.
Yeah. So basically, we do have a I have. So basically, we do have a video on MM tool.
Yeah, because I've seen all the videos.
Okay, you can watch that.
I've seen all the videos, but I don't know, since I never had this. I never. I needed to see this the way you're doing it right now. So, and so the MM tool is the one below the charts that you have right now, right?
Yeah, but we're not gonna talk about it today.
Okay.
Because it's pretty complicated, and I don't think so. It's worth it to talk about it right now. It's gonna confuse you more than it's gonna help you.
Okay.
That is why I'm not gonna teach anything about it. So yeah, I think so. I taught you the option analyzer, and I have taught you the basics of the chart, right? And then the one last thing I can talk about. Basically, we also have a replay tool in the fractals. You can just use it right here. I rarely use it, to be honest, because I use the sliders right there. Now, if I just want to play the recording or like the replay of this chart, I can do it by just clicking on replay, and it just replays for me. Okay, that is all it does. We can go a lot more back at it, and let's just say that we want to backtest something, like you want to backtest the moves of the mean wave. This blue light is actually the mean wave, and let's just say you want to backtest that. You can actually do that using this tool right here, the animate one, and also you can do that by using the slider. Make sense?
Yes.
Okay.
What does periscope does?
So Periscope basically gives the option contracts for certain setups. Basically, we have a big video on option analyzer. Actually, Mr. Russell himself explained about it. Now, I'll suggest you to watch that video if you have it.
It was the one that was you and Mr. Russell combined.
No, 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 no. It was another one. It was like from 8 months ago, I guess.
Okay.
Mr. Russell explained the periscope too. And I'll
Okay.
send you the video link,
Okay.
and I want you to watch that. Okay, makes sense.
Yeah. Yeah.
So I think so. For today, we are done, and I also need to work on something else, right?
No, it's
So
been
I'll
very useful. Very
thank
helpful.
you. Sorry.
It's been very useful.
So I don't get you. What are you trying to say?
Yeah. Yeah. That you're very useful. You're helping me a lot.
Oh, thank you so much. That's great.
Helping me